Good morning to you, Aya, and thank you so much for joining me.
Good morning, Aya.
Well, rather loud or rather cheerful this morning, aren't you, Aya? But the markets didn't finish quite cheerful last week. We saw the numbers coming in rather lackluster. In fact, for most of last week, bearish trading of putting the OSHA index down about 2.3% week on week. We year-to-date return at 11.4%. Give us your thoughts on how the market fared last week.
Yes, thank you. What we saw play out last week was just revealing the weak investors' confidence that have continued to pervade the Nigerian equities market. As a result of that, the holding period when investors take position in the stock has waned significantly. We saw 4.2% week on week gain in the previous week, and last week was just mostly profit taking from stocks that appreciated significantly in the upper week. So we feel that the local investors, which have been the ones playing in the market within the past 2 to 3 months, have little confidence about the market. And prices that we see now are not necessarily reflecting the fundamentals of most of those stocks. They are really trading below those fundamentals. In addition, I would like to add that as a result of reduction in foreign portfolio transactions in the market, based on NSE data, we saw contribution of foreign portfolio investment reduced to as low as 34% in June compared to 54% in May. So when you look at all these factors together, you will expect that the market, the downtrend that we are continuing to see in the market is expected.
But then last week, one result that came from the banking stock, Zenith Bank, was quite impressive, boosted investors' confidence in the equity, and one would have expected that would have translated into positive returns on that particular equity at the market. It did close positive, but it wasn't enough to boost the banking index, which actually came in lower.
Yes, essentially the results did analyst expectation with a top line growth of over 20-something%, and also their bottom line of over 24%. However, when you look at the overall market sentiment, down the effect of this positive growth that Zenith Bank recorded in its H1 2015 results. So, in addition, Zenith, which is based on when you look at based on history, Zenith doesn't pay the banks don't pay interim dividend. However, maybe in order to help attract investors, also propose 25 dividend per share. However, this did not translate to any positive movement in the share price of the bank.
So let's talk a little bit about your outlook for the equities market for this week, just before we go into the fixed income segment of the market. What are your expectations for the equities market?
Yeah, we expect that the market will still continue to trade downwards. However, there will be some attractive positions that will present itself. Investors, especially for domestic investors that are not exposed to any foreign exchange risk, will try and identify stocks within the medium to long term that have strong fundamentals and are trading at significant discount to their fundamentals. So that is what we expect this week. We still expect the market to continue on this downward trend. However, it may likely be mild, as we saw on Friday. Markets closed at marginally lower than Thursday.
Well, let's talk a little bit about the Treasury bills market. We saw yields on some of the short-dated maturities, like the 90-day maturity and 181-day maturity increasing. That's not unconnected to the fact that there was some OMO maturity at the market. But how do you expect that to shape the market this week?
We expect, as a result of the downtrend in the equities market, we would continue to see renewed investors' interest in the Treasury market, and as a result, we expect yields to also increase slightly. Even with the current level of yield, it's very attractive to investors with the risk-free investment, especially for domestic and institutional investors that are not exposed to foreign risk. They will find this very attractive, and we expect that they will sustain the momentum, that the bullish momentum that we saw in previous weeks.
Will that also be replicated for the bonds market? Because with yields at 20-week high levels and inflation stabilizing demand, is demand likely to return to this market space this week?
Yes, we will expect to see increased demand in the secondary market. If you recall, last week we had the primary fund auction, where investors had to reallocate their resources within the primary and the secondary market. So this week we expect that investors will return into the secondary market. As a result, we expect to see a slight moderation in yields before the end of the week.
Well, thank you so much, Ayo, for your perspectives.
My pleasure.